Look, the evidence will say it is a head fake. I can't not acknowledge that. And I'm long NVIDIA and I'm long AMD. Lam Research is by far the best large cap semi equipment maker that you could buy. I've owned it in the past. We've all talked about it on the desk. They've got a very strong balance sheet. They've got a nice capital allocation strategy, but their ability to grow their revenue in future quarters is constrained by the challenges right now in the semiconductor industry. And there's not the clear visibility that we thought there was going to be in prior quarters when that ultimately would be residing itself. We thought at this time, we thought we'd get the clarity. We don't yet have the clarity. So you're going to have to hear from management that they are overwhelmingly confident that they're able to overcome a lot of the challenges that have been placed now for the better part of the last 18 months.
I mean, who is in any business is able to articulate?
But the semis are the most critical industry to the entire economy.
Then, Jenny, if you are, there's a binary thing. Either if you believe you're going to have a recession, how can you be positive on the chips? If you don't believe that we're going to have a recession and the economy is going to remain reasonably strong, then I could see you being bullish on the chips. Well, is it that simple? Which side of the economic boat you come down on?
No, and I don't think it's binary. And this goes back to at the beginning of the year. What was I saying? This is going to be a year that takes hard work. I don't think this is a broad brushstroke year. I don't think you should say buy the semis, sell the semis.
Okay.
I think we need nuance.
Okay, let's do nuance then. Okay, yeah. Applied materials.
Okay.
Why?
AMAT. Why? 11 times earnings, 13% growth. That's one that's very different than NVIDIA, right? Teradyne's very different than Taiwan Semi. And you need to dig in on each of these and see what's the story, what's the earnings growth, what's the valuation. And you know, Scott, how a while ago we were talking about the story needs to work in concert with the valuation. Some of these, they're not working in concert. Some of them, they are, but they've all been tossed out. But I think you're doing yourself a huge disservice this year if you paint semis with a broad brushstroke. There are really great opportunities.
Okay, but why tell me why then Applied Materials will hold up in the face of, if you're a bear on the economy, why is Applied Materials going to hold up better than others?
Straight up because of the valuation. Because it's just not, it's trading at 11 and change times. That's so cheap. It hasn't climbed, or rather, it's already fallen off of the cliff, you could say. When you don't have a frothy, nosebleedy valuation, there's not that much downside left to go.
So then these are all ultimately, in your mind, valuation plays?
100%.
In other words,
you could, but I like to spread it out a little bit too. And so you can see I'm not buying three semiconductor manufacturing stocks. I'm buying a testing stock, an equipment stock, and the semi-manufacturer designer, who I think is priced as if it's going to die.
Sure, but what if cheap becomes cheaper?
It could, but you know what? I don't think it's going to become 80% cheaper or 60% cheaper. Maybe it becomes 5% cheaper, and that I can live with. So it's, again, magnitude, right? Magnitude, magnitude, magnitude.
Okay. The other one to keep in focus today is NXP, because they report after the bell today. Jim Lebenthal, whom you probably know, owns that stock. He loves it, which is why I wanted him to join us today to have this conversation. The key question is, as someone was asking today on the street, is the exposure here to autos, which you have cited repeatedly as a reason for being bullish, a saving grace or a weak spot as we think about a slowdown and a peak in auto sales? I'm sure you're going to argue, obviously, that it's a saving grace, but why?
Yeah, so here's the argument, and then anybody can decide whether they want to invest on this or not. In the last year, we know that North American light vehicle production was 13 million. We also have a pretty good feel, based on historical trends, that normal demand for a year like the last 12 months is 17 million. That leaves a 4 million car gap between what was needed and what was supplied. Now, how do you make up for that? You basically run your cars longer on the road. That's why the average age of the car on U.S. highways today is 12.2 years, which is a record high. And frankly, these things can't last forever. Yes, my beloved genuine parts will help fill that gap by keeping them going, but there's only so much you can do before a car needs to be replaced. even if you think that some of that 4 million car gap gets eroded because of whatever happens with the economy, still there's going to be a healthy demand for these cars still. You got Cleveland Cliffs report on Friday. They say, at least from their product side, they're seeing strong OEM demand hanging in there. So NXP, as a 50% of their business supplying chips to automotive, should do very well, not only on this report, but also the guidance going forward.
Sure, but that would suggest that there can never be a slowdown in auto sales of anything meaningful if all these cars are on the road with the statistics that you just cited. That's not really how it works, though.
So what I said, just to repeat one of the sentences I said, is that even if you expect that some of that 4 million gap between what was demanded and what was supplied erodes, and that's in response to a slowing economy.
I caught that
There's
line.
still a heck of a cushion there in terms of the auto production that is likely to increase and place demand for NXP semiconductors.
Do you see how nice he is?
Jim's
right?
So nice.
Such a gentleman.
So many others would have said, you're an idiot, right? Didn't you just hear what I just said?
You guys were mixing it up already today. You don't need to add me. I'm not the extra spice you need in the dish today.
Is there a counter argument, Josh, to Jim's positivity here ahead of NXPI and where he obviously sees it as it relates to the auto business?
Look at Josh.
I don't follow NXPI as closely as Jim, but General Motors will report this week, and you probably will not want to own semi-related names into that report. Let me just quote the analyst here, Blaine Curtis at Barclays. Many semi names are up double digits in the last couple of weeks and high teens to 20% since the beginning of June, despite what we see as large cut to earnings over the next 12 to 18 months. Our base case scenario is for 30 to 40% earnings cuts for the semi group, and the capital equipment and memory names are going to be closer to 50%. So if that ends up being even close to true, yes, these stocks have come down in multiple, NXPI in particular. The stock is off less year to date than the multiple is. The multiple's down already 30%.
Right.
So yes, that's true. But these cycles run longer than a couple of quarters. The up cycles and the down cycles. We're in a down cycle. It's just beginning. And not one of these charts that we've mentioned in this segment looks viable. So yes, long-term, et cetera, of course, we all understand that. But these are in very, very dramatic, obvious downtrends.
Okay.